right? So in order to reconcile with the bank statement with the cash books, we write it down on the cash book, but we see the bank statement. So in bank statement, what we see? Listed on the bank statement, there are collection of amount. So bank received on our behalf, right? So in the bank balance already increased, but our books, we didn't increase the balance because we don't know that bank received or not. We see the bank statement and then we realize, okay, customer paid us the money, right? So that is added, right? Service charges, this will decrease the book balance. Subtract service charges. NSF check, we subtract that, right? And also the cost of printing the checks, $20, right? Agree, everyone? Please participate. Florian?
I just
Good. Please
I
ask.
would like to know why did we start the balance with 3,000?
What?
What you start the balance of July beginning with 3,700? Why?
Why? Because we need to reconcile that this difference and this difference is not because of fraud. So we want to tally, we want to match bank reconciliation statement, right? So we are matching our books with the bank statement. So that's why we started with our beginning balance of both, and then we see whether the balance is okay or not. If not, then maybe because of error or maybe because of fraud. Right, Florian?
Okay.
Constance, understand?
Yes.
Jody, Ali,
Yes.
Yep, clear.
Wusiong, Fabian, Lota, Nimesh?
Yes.
Yes.
Good. So now let's talk about the others. So in reviewing his cash record, Logan identifies a deposit in transit. Deposit in transit is not written in the bank side, right? So he reviews his cash, records, and you find out that we issued the, we deposit our checks to the banks, but still money is not transferred, right? And they check it out and they found out that, okay, bank is still processing this inflow. So on the bank side, we add in transit, right? And outstanding checks. So Logan wrote it down the checks and gave it to supplier, whatsoever, to people, those who owe. So total 1,220, but they didn't present it to the checks. But in the banks, in the book side, they already decreased, but bank don't know. So it means we need to decrease the bank balance as well. Less outstanding checks. And now, during July, Logan recorded $540 check. The check was worth of $540. So he wrote it down the check clearly, no mistake. But when he was recording the check on the book side, he made an error. He wrote it down 54. So this is a mistake for book balance side or bank balance side.
Book balance.
Well done. Because Logan did that, and Logan belongs to managing the book records. Okay, so this is not from the bank side. So in real sense, cash should be decreased from the book 540, but cash is decreased 54. How much is not decreased? 54. 540 minus 54. Answer 486. Right? Now, the balance. You look at the balance here. So this is called bank reconciliation statement. It can be in account format, in which you write down first the bank, and then on the downside you write on the books. But at the end, these must match. If not matched, it may be human error or maybe fraud. So question that I also answered in our last lecture as well. Why there is a need to make bank reconciliation? So that we know that handling of the cash, it's in the company is not going through the fraudulent activity, right? We clearly see that bank balance is different, book balance is different. So naturally, the boss or the person who don't know about the accounting, he must be very confused. Okay, it is because of the fraud, because bank balance shows we have $1,500 in our account, but you say in our account there is $3,752. So what are the reasons? So these are the reasons, right? So your balance should be, and now journal entries. So who will make the journal entries? Bank? No. Bank is not responsible to maintain your journal entry. You are responsible. So it means the bank side, we don't make entry because that is concerned to the banks. So it's about the banks, whatever they deal with that. Our dealing is to maintain the book side, right? So let's do the entries. So number one, cash collection. What is the entry? Cash is collected. Cash increase, right? And mostly these are customer paid us back, or customer paid us the money, returned their obligations. Customer paid us money, cash increase, accounts payable decrease. So cash to accounts receivable. Now bank charges, service charges plus cost of printing the checks. How much? $34. Entry would be either you set up bank charges, expense to cash, cash decrease, credit, expense increase, debit. So it would be bank service charges or expense to, and which kind of expense? Miscellaneous expense, or you can set up different accounts. Every company has its own accounts to deal with that. So you can also set up bank charges or banking charges expense to cash, or miscellaneous expense to cash, right? So don't worry where this 34 came. 34 is coming from with the addition of 20 plus 14, because that is the bank charges in total. Service charges plus cost of printing the checks. So what's left now? The correction. So when you recorded 54 is not 540, you made the entry salary expense to cash 54. So 486 you needed to, so this looks very nice, you just add 0 here, right? But you cannot do that. Why? Once you record it, it cannot be edited. Otherwise, it is a fraudulent activity, right? So you cannot just put 0 here. So you make an adjustment entry. So how much you didn't record?
486.
So same entry. Salary expense 486 to cash. So that was the point that I was curious to explain. It's not like that. Okay, it's just a human error. Okay, you write it down 0 and 0 here. Entry is balanced, right? You cannot do that because that would be a fraud. Once you entered on the cash book, you cannot change that. How you can change that? Through double entry system. You make another entry, so that effect is nullified. So you see that effect is nullified. Salary expense debited 486. If you transfer that one into T accounts, so When you transfer that into T account, so salary expense is going to be, see the salary, first 54 debited, right? And then 486, so total 540. So this is how you correct your mistakes, right? You also cannot do that, cutting this one and just write it down 540 here, 540. You also cannot do that. That is misrepresentation. Okay. So let me clear all this mess and see a very nice typed error here. We also left one more thing, NSF check, right? NSF check, non-sufficient fund check. So when we receive check from our customer, we made the entry cash received from customer to account receivable 240, right? But now the check is bounced. You didn't receive the cash. Now you make reverse entry so that the effect is nullified. So you make reverse entry, account receivable to cash. By doing this, so you see, if this is account receivable, so when the accounts were paid as cash, we decrease the account receivable 240, right? But when cash is bounced, we increase the account receivable by 240. So you see 240 cancel. Account receivable balance remain the same. Whatever is the balance, if balance is 5,000 here, so it remain 5,000. So that's why you adjust the account balance. You make a reverse entry for non-sufficient fund. It means cash is not received. When cash is not received, you increase the balance of account receivable. Right? So this is how you make bank reconciliation statement. Again, on the bank side, what we do, bank balance plus deposit in transit less outstanding check, and then adjust banking errors. On the book side, we add bank collections, electronically funds, transfer receipts, payments would be less, receipts would be added, service charges would be less, revenues would be added, non-sufficient fund would be less, like this. Plus minus, because if electronically funds payment, then less, electronically funds receipts, then addition. Cost of printing checks, negative, and book errors can be added or can be negative. Right? Okay, now let's move to our next learning objective is internal control over cash receipts and cash